Citadel. Now let's talk about a South African company that is inextricably linked to China. It's Kumba Iron Ore. The company has reported a dip in its first half operating profit. The miner battled with weaker iron ore prices and also a slow recovery at its flagship Sishen mine after crippling strikes last year. Tumisho Maganyele caught up with Norman Mbazim, who is the CEO of Kumba Iron Ore, to chat about those numbers. Here's that conversation.
That's true. The rand was 16% weaker this time round and was able to bring our revenue up to that 26.3. But we should not rely on rand weakness. We should expect that our economy relative to other economies will stay well. So we really look forward to the rand being more stable.
I'd like to focus a bit on China. We know that they're quite a big export market. About 69% of your export volumes go there. But you have mentioned that, the steel fundamentals are still a bit under pressure. We have, the Chinese economy slowing down. But at the same breath, we've had, the likes of Rio Tinto and BHP Billiton really ramping up their production. So is this sending, a mixed message? Is there still enough demand in China?
China is a driver of our market. It consumes the vast majority of the iron ore that goes out. Its economy is still growing. I think recently people were announcing 7.5% growth, which is helpful. But however, that growth is slowing down now, and that has put some pressure on the iron ore price. And the increases, especially from Australia in terms of supply of iron ore, will also put some pressure on prices. That's why we're expecting that in the second half of this year, prices will probably be lower than what they were in the first half.
On the topic of your iron ore prices, you have mentioned that they will be under pressure. What do you forecast the price to be sitting at?
If I could do that, I would be the richest man on earth. We just see that there's some pressure, but we see that the stocks at the mills are a bit low at the moment, and therefore when the mills start to restock, we can see some support. So although we're seeing it coming down, we're not seeing it coming down significantly.
So you're not going to commit to a price
I'm afraid
right
not.
at the moment? So you reported your profit margins at about 55. It's a decrease of about 4%, but you attributed this to an increase in your operating expenses. And over the next financial year, if you do manage to rein in your expenses, where do you forecast your operating margins to be sitting?
Do you know, our expenses are relatively under control. The issue that we have is that we are increasing our stripping. So the amount of waste that we move has been going up year on year, and we expect this to continue as far as Sishen is concerned. And that is what is resulting in increased costs and therefore reduced margins. We expect to continue to increase waste stripping at Sishen and therefore put a little bit more pressure under our costs, but we expect the margins to remain healthy at above 50.
Now, I just want to talk about your demand, because you said that your focus area will still be on making sure that you feed the demand. What is driving local demand at the moment?
Local demand is really also driven by the activity in the economy. Recently, the economy has been slowing down, and therefore the demand for iron ore and the demand for steel has been going down commensurately. You can see that the government is doing a lot to try and bring it up. I think today there was some announcement from the ANC about this, and therefore we can expect that once the economy picks up, the demand will also pick up.
The production output for Sishen, you said, is around 37 million metric tons, but you also said that this is reflective of the knock-on effect of strikes. How are you managing the labour situation on that front?
Do you know, I'm very pleased to say that we have had stable labour relations this half, and this is in a climate where industrial relations are really quite tense at the moment in our industry. So I'm very pleased that we've had that kind of stability. We've been able to recruit all the people that were dismissed as a result of the strike last year, and therefore we're quite stable. We're not bargaining for wages this year, as we have a 2-year wage agreement which expires in 2014. So I think that bodes well for us.
I just want to touch on that wage agreement. You've seen some of the other companies saying, you know what, we're going to come and give you a percentage up front for the next 2 years or 3 years. I mean, in 2014, is that the route that you're going to take, as opposed to bargaining as and when the wage negotiation season starts again?
This year, we've got an amount that will automatically kick in on 1st of July. And that was between 8 and 10% depending on the grade. We expect that we will negotiate next year well before the expiry of the current agreement to ensure that we have an amount that is agreeable to both parties going forward.
Now, moving on to the issue of the Sishen supply agreements and the mining rights, we know that the agreement or the contract with ArcelorMittal had in fact lapsed. Can you give us maybe an update on what's happening with the case?
The interim price agreement, Tumisho, is at about $65 a ton, and it's for 4.8 million tons for this year up to December. If we are unable to reach agreement on all the other issues before then we'll have to negotiate another IPA. But I would hope that the court cases and all that will make further progress this year such that we don't have to have another IPA.
And can you give us an update on what's happening with Imperial Crown Trading?
The Supreme Court of Appeal had their ruling, which was in our favor. Which meant that 100% of the Sishen rights belong to Kumba. But the DMR and ICT have sought leave to appeal to the Constitutional Court, and that hearing is on the 3rd of September.
Norman, is there perhaps anything else you'd like to add that you think I haven't covered that is important? As you mentioned, you do like analysts better, and if you want to correct anything in the media, here's the chance.
Just to say that over the past few years, we have been having issues with Sishen. We've done a full study of Sishen this time, and we are much more confident about our ability to deliver on the Sishen operations into the future.